Welcome to the Why We Build podcast. Join Greg Wallach to explore the world of remodeling, whether you're on the production team, design team, or managing the whole show. You can expect insights, tips, and stories that inspire and educate. So, let's dive into the Why We Build podcast.
Welcome to the Why We Build podcast, the podcast for remodeling business owners and production managers and design managers who are serious about building something that lasts. I'm your host, Greg Wallach. And as always, if you have any topics you want to talk about, any guest suggestions, please reach out, Greg at remodelersadvantage.com. Today, we're going to talk about an overlooked profit opportunity in the trades. And I've got the guy who literally wrote the playbook on this. You know, one of the most consistent themes I hear from service business owners, whether HVAC companies, plumbing operations, or remodeling firms, is the pain of callbacks and warranty work. You do the job, you do it right, and then 6 months later, something goes sideways and you're sending a crew back out the door on your own dime. A cost of doing business, right? Well, it doesn't have to be that way. What if that very cost, that very warranty headache could actually become a profit center for your business? It's not hypothetical. It's exactly what my guest has spent 3 decades helping business owners do. He's taken the concept of reinsurance, the kind of financial engineering that big corporations use to manage risk and build wealth, and made it accessible to home service entrepreneurs like the ones in our community. Now, today's episode is going to change the way you think about warranties. I promise you that. Timothy Byrd is the founder and CEO of Warranty RE, and he is a nationally recognized reinsurance and risk management expert with more than 30 years of experience helping business owners increase profitability, retain risk, and build long-term wealth. Tim has worked with hundreds of entrepreneurs to create strategies that turn insurance expenses into assets while protecting their companies from unforeseen risks. He brings a unique perspective on business, growth, captive insurance, enterprise value, succession planning, and financial resilience. His practical real-world approach helps home service owners uncover hidden profit opportunities and build stronger, more valuable businesses for the future. Tim, welcome to Why We Build. Great to have you here.
It's great to be here. It's a blessing. Thank you for having me.
What did you tell me before? Blessed to be unstressed or
Oh,
something?
too blessed to be stressed.
I love
Yeah.
it. I love it. That's going to be my new mantra for sure. Why don't we jump right in? Background. How did we get here?
Well, many years ago, I was in the insurance business. Then I got in the car business because a buddy of mine said that was easier, which it wasn't easier, but it was the path that God put me on. And then in 1994, I started a company, and that's the same company I have today. So we serviced car dealers and providing them with warranties and service contracts and such. And then learned about reinsurance. And what that allowed is for car dealers to own their own warranty company. So I have been in business, like I said, since 1994. I live in Virginia on a little farm that's actually a peninsula that sticks out in a lake. Been here for over 20 years. I have 8 kids and 4 grandkids, and I have a little children's ministry here because it's such a beautiful place that we have groups of kids in the summertime come and visit us and get to swim and fish and pet the horses and the dogs and the chickens, and that's who we are.
You know, you said, over 30 years we've been doing this. Was there a moment or a situation that made you realize that the home service industry, remodelers, electricians, plumbers, needed this specifically?
Yeah, I was at a meeting in Scottsdale, Arizona, and Brandon Dawson does a program out there called Elite Edge, and I was sitting there talking to a an HVAC guy, and he was telling me, and that's a guy this is a big company. He sells 1,500 HVAC units a year, and he says, we do a value add warranty on every unit we sell, and we send a third party warranty company $400 for each one of those. And I'm like, man, that's $600,000. I'm like, this is something that we could really help you with. So that was the point in which I realized, hey, there is a whole industry out here of home services trades that are not being serviced by this. They have companies, we call them Joe Blow warranty company, that you can buy a warranty from and as a value add, but all you're doing is filling up their coffers and hoping that they pay your claims.
Tell me how this works for our people doing it through you instead of the Joe Blow kind of firm. How are we, like, what money are we leaving on the table and how can we put it in our pockets?
Well, can I tell you how it works? And then that way
Absolutely.
you'll have a
Yeah.
better understanding. All right. So, first, let me tell you about your company. You're probably an LLC or an S Corp. And an LLC or S Corp, it generates income. And whatever you don't expense out flows through to you and becomes your profit, but it's also your taxable income. Now, we've been in this business long enough. I'm just talking about being in business to understand as a S corp or an LLC that flow through money and the money that you're paying taxes on isn't necessarily the money you got in your pocket. Okay, so if you can expense out uh, in any kind of thing, anything. If you're expensing it out, you're not paying taxes on it. So what we do is we set you up with a separate company, and it's actually a C corp, but it's a special kind of C corp. And that C corp is a small insurance company. And Uncle Sam says that you can put $2.9 million a year into a small insurance company that you own without paying any tax on it. So that to me, if you can set up warranties, and let me back up and say this: the manufacturer of whatever you're selling usually is warranting the material. But you have a situation where, regardless of whether it was a new part or you just went out to repair something, that you find yourself maybe having to go back out there. And what that means is that you're pulling a tech off of a job that you're getting paid to do and going back and doing a job that you have already been paid to do, but something failed. Now, it may be that your guy didn't do what he was supposed to do, or it may be that new part sometimes fails. But regardless, and even if the manufacturer is going to cover the part, you have to cover the labor. So what we do is we help you to take that risk and cover it and set aside money for that. Now, you're just not setting it aside and putting it in a drawer or something like that or in an account, because by doing that, that's still taxable income. It doesn't matter if you set it aside and why you set it aside. So by doing it the way we're talking about, where you own a separate company, you're able to you're able to expense it out of your company and put it into your reinsurance company. And then when you have claims, those claims are paid for. And you simply file a claim and it's paid for. It gives you value add when you're talking to your customers out there. Why should you do business with me? What differentiates me from the other guy? It's because I'm going to warranty my work. And so if anything happens, we're going to be right back out here. And that peace of mind is a lot. Y'all know that. But the other part of that is that you're building a capital resource. So let me break this down in something not quite so big as 1,200 uh, or 1,500 contracts a year. But let's just say you did 200 contracts a year. Okay. And you put aside $600. Well, If my math's correct, that's somewhere around $100,000. Okay. So if you're putting out $100,000, then and you pay out a little bit in claims, you have money left over. Now that money that's left over becomes your underwriting profit. So when you put money in, it's the customer's premium and it's on behalf of the customer. But I think the easiest way to explain this is that your car insurance. So you buy car insurance and your car insurance policy is for 6 months or 12 months, and it's never more than 12 months. So it's usually 6 months. So you send in X number of dollars to pay your car insurance, and then after 6 months, the policy expires. Well, that money becomes underwriting profit. Okay. For whoever, State Farm, farmers, whoever, they're making underwriting profit. And that's why they have the biggest buildings in the city, them and the banks, right?
Listen, I'm not too far from Hartford, Connecticut. I mean, that is the insurance capital of the world. So I get it.
Yeah.
I get it. Tell me about so the like reinsurance, the definition of that, and then you also mentioned to me before this idea of captive insurance, and how do they either work together or work apart? I'm not too sure about that.
Well, what we're going to do is set you up a captive, is what they call it. And basically, what we're doing is we're insuring your warranties on top of what you're doing. So you set aside premium for your warranty, and that a portion of that goes to buy insurance to back you up just in case you fail and you spend all your money paying claims or whatever you do that causes it not to work out, but there's a customer out there that is still under warranty and you don't have the money to pay the claims. Then what we do is we step in and pay those claims for you so that the customer is always kept whole. So that's where reinsurance comes in.
The idea, so someone wants to get started in all of this. What are the steps and how do they, become their own insurance company?
Well, they all they have to do is call us. This is turnkey. I mean, you may be buying a warranty from a third party warranty company, and as far as your employees or your or the public is concerned, nobody will see any difference. You're still going to have a warranty that you're buying from somewhere else. It's just you're buying it from yourself. So we do everything for you. All you have to do is give us a call and or go to our website, warrantyre.com, and it's warranty with a hyphen re.com, and you can look over. We have several different. I mean, we anybody that provides a warranty, we can help them. Okay, it doesn't have to be HVAC or roofing or electrical or plumbing or flooring. We in fact we just did one for a water treatment guy, so it can be any kind of trade. And like I said, this is not new. It's new to you. It's new to the home services business, but we've been doing this with car dealers for 30 years. And it just happened that it was revealed to me this entire industry that is not being is very underserved. Let's just put it that way. Is very underserved, and it is an opportunity that will be the best return on investment that you could possibly do.
Talk to me about some of the objections you might hear on your end when you're proposing this sort of thing to a company.
Well, a lot of times people find it too good to be true. But like I said, we've been doing this for many, many years, and we're all over the United States. I mean, we have clients in Hawaii and Alaska and Maine and Florida and Texas and all those states in between. So, like I said, we've been doing it a long time. It's tried and true. I think that I can tell you that the number one objection that we run into from people who have started doing this is that I wish I had done this a long time ago. That's their biggest regret.
Yeah. In terms of scale for a company, does it make sense for like, you know, most of the people that we work with are remodeling firms and not so much electricians. I mean, indirectly we're working with electricians and plumbers and that sort of thing. But is there like a minimum revenue for this to be valuable to a company, or you know what I'm
Yeah,
saying
well,
there?
eh, let me put it to you this way. It is a company that we set up. And this company is going to require every year to file a tax return. And we have to pay a CPA to do that. It's also has to, it's a license renewal, just like your business there, whatever state you happen to be in, we do a license renewal for you and that license. And I mean, it's going to cost money to do that. So, and you're going to have a few claims. So you have to have enough money for that to make sense. So what we usually do is we if you do about 25 jobs a month, then I think you will find this worthwhile. Now, that being said, I want you to understand this too. Most people who get into this realize how lucrative it is, and they start finding other ways that they can, whether it's they may start out with just a labor warranty, and then they might think, well, maybe I should sell them a service contract or a maintenance program, things like that. And those kind of things can be put into your reinsurance company. Now, let me back up and say that the warranty part is the easy part. And a lot of people don't realize that warranties and service contracts are two different things. Okay. Warranties you give as part of the price of your service. A service contract is sold above and beyond the price of the service. Okay. Now, I'm telling you this because warranties are governed by the federal government under Magnuson-Moss, whereas service contracts are governed by each individual state. And so, of course, there's 50 states and there's 50 different ways of doing things. And we keep up with that stuff. But sometimes it's a little bit more difficult to put together a service contract. But so just so you know, though, you hear people say, I bought an extended warranty. Well, that's really a service contract, and it's a loosely used term across both areas. So
One of the things you had mentioned in your bio was this idea of being involved with succession planning and sort of helping companies with that. How does this reinsurance, how does it help that? How does it help the enterprise value? Remodeling in general is an industry that's coming of age. There's a lot of folks that are either selling their businesses, second, third generation, maybe taking over. How does this enhance the value? And I know it's a separate company, but somehow there's got to be a translation there.
yeah, the thing is that this gives you a lot of options. One is that you can borrow the money from your reinsurance company instead of taking it in as a dividend distribution. Okay. Now, I want you to think about it like this. What do rich people do? They don't take in ordinary income. They borrow money. And by borrowing money, you don't create a taxable event. Now, I will say this that if you did take a dividend distribution from your reinsurance company, you're only going to pay at most 20% tax. Okay. So either way, it's a really good idea. But what happens is because you have this separate resource, it can help you fund all kinds of things that you want to do. It can also help you fund your retirement. It can help you. I mean, we had a client just the other day that came to us because his son wanted to buy a house. So he decided that he was going to loan his son the money from his reinsurance company, which is perfectly fine and not front loaded like a mortgage. Okay. So his son could borrow the money from the reinsurance company, buy the house. It's better for the son because he's going to pay it off faster. And it's better for the dad because now his money is actually making a little bit of profit and he didn't give his son anything, right? He just gave him an opportunity. And so that is very important. The other part of this is that this is something that you could pass on if you had a family member that wanted to be to take over your business one day. Then you have this other resource. It's separate. And when I say separate, guys, listen, I'm talking about completely separate. Your regular income tax form that you file will not indicate anywhere on there that you own this other company unless you took a dividend distribution. And that would be the same as if you took a dividend from any stock that you owned. You would have to show that. But let me tell you something that's pretty cool about that is that when that money is earned out, and when I say earned, if you had the easiest example is this. If you had a 12-month warranty, it's going to earn out 1/12 per month for 12 months. So at the end of 12 months, it's completely earned out. So in other words, at 6 months, it's half earned. Okay. Once that money earns out, you do not have to take it out. There's no flow through. That money stays there as long as you want it to. It could be there for 10 years. And like I said, we do a tax return, but the only tax that you pay is any investment income that you would derive off of that money, not the money itself. Okay. So by borrowing it, it gives you an opportunity to take that money without taxing it. But what I was going to say is that while that money's in there, you can we put this in a trust usually, okay? And you can order the trust. You can say, listen, I want to buy 100 shares in Nvidia, all right? And so they make the purchase for you. But that is within your reinsurance company. So whatever wins or losses that stock purchase makes is within that and has no reflection on your personal tax return whatsoever. Now, like I said, if you have wins, then just like any other place, the reinsurance company itself, when the tax return is done, would pay for for the taxes on that interest income. So I hope that helps you a little bit understand that.
So for folks who are listening only, I'm looking at Tim here, and there's so much joy in this man's face explaining this to us. Where does that passion come from?
Oh, look, I like I said, I've been in business a very long time, and I read a book called Outwitting the Devil, and it's by Napoleon Hill. And Napoleon Hill, for those that don't know, wrote Think and Grow Rich back in the 1920s. Okay. And what he did, he was commissioned by Dale Carnegie to go around and interview all the rich people of that time period and see what the common thread was. And so after he wrote that, he wrote another book called Outwitting the Devil. Now, everybody's heard of Think and Grow Rich because it was like the first of its kind. But most people haven't heard of Outwitting the Devil. And the reason is because his wife was petrified that he was going to get chastised for writing a book called Outwitting the Devil. So she had made him promise that he wouldn't release it for in her lifetime. Well, it went and there's the Napoleon Hill Foundation, and they found that manuscript, and a lady named Sharon Lecter, which wrote the book 3 Feet from Gold, which is a great book also. Sharon published this book 70 years after it was written. And the first 3 chapters of this book talk about um, about how he went about finding the money. And this was in the Great Depression. Okay.
Right.
He had during the Great Depression, and he had gone out of business. He was, in fact, I believe Fortune magazine was started by Napoleon Hill, which is still there today. But what happened is that he struggled, and then he found his course, and that's what he explains. And then that's the first 3 chapters. After that, it's kind of like C.S. Lewis's book Screw Tape Letters. I don't know if you're familiar with that. So
Yes.
Screw Tape Letters is about 2 demons who are, one demon is training up another demon on how to capture souls, right? And so what Heel does here is he has an interview with the devil, and the devil is has to tell him everything in truth. He has to be truthful about all his answers. So it's very intriguing just to listen to it. And honestly, I would rather you listen to it than you read it, because they use kind of actors to play out both parts, and then Sharon Lecter comes in and kind of brings in some narrative that is makes it a little bit more modern, because it was written in the 1930s, maybe early 30s, so 20s and 30s. So anyway, I would encourage you to read that, because what it showed me is that I was drifting. Okay. Now, what Hill points out is two things. One is that when we drift, and procrastination is probably a great example of drifting, but if we're not, as he puts it, have definiteness of purpose, if we are not focused on what we are supposed to do, and if we can be, if we can stay focused exactly on what our goals are, then we can reach our goals. But if we start drifting, then we find ourselves just kind of going through the day to day and not getting the job done. So one thing uh, Brandon Dawson introduced to me was about we also hit a ceiling, and I think that is a John Maxwell term about hitting your lid. Okay,
Yeah,
so what I
law of
want
the
to say,
lid.
yes, you don't want, if you hit your lid and then your employees are coming up and they're surpassing your knowledge, then they're not going to stay with you. I can tell you that. So we have to continue to grow and learn and be the best in our company, so that the people below us are trying to emulate us so that they can grow and scale themselves. So we have what we call, we're entrepreneurs, right? Well, they're entrepreneurs. They're people who have chosen to be a part of your organization. And if your goals and aspirations are big enough, it has enough room in it for everybody that works for you, their goals and aspirations. And so if you are familiar with those goals and aspirations, you can help them reach their goals, and they can help you reach yours.
But Tim, usually I ask the question, you have any books to recommend? I think I have my next 3 months of reading all planned out. Thank you for that. So we're getting towards the end of time here. A business owner that's listening to this, what should they do in the next, say, 30 days to get the ball rolling on something like this?
Well, I want to mention one other book
Sure.
it's imperative. It's called Starting the Work, and it's by Natalie Dawson. Okay, Natalie Dawson is a young person, and Natalie has sat down and she's Brandon Dawson's wife. So he's a multimillionaire, and she has laid out exactly the things that you need to be doing to work on your business, not just in your business. So read Start the Work. Very important. In the next 30 days, I would very much suggest, but let me tell y'all something about us business people. We see and find some great ideas sometimes, and then we just set them on that stack of stuff, and we don't get to it, or we forget about it because it gets covered up with other stuff. So act upon this. This is something that is a true, absolute opportunity for you to grow your business, have a capital resource that you can tap into when you need to. And I want to point out too, if you tap into this as a loan, okay, and you go out and you buy equipment, a building, or whatever, those things, when you buy those things, you're creating a tax write off, right? So, what you can do is then turn around when you do have a big tax write off and include your loans into what we do is we change them to non-tax dividends. So in other words, you're taking it into income, but you're taking it into income when it's convenient for you, when you already have a big write-off, so that you're really not paying taxes then either. So there is such good strategy. We've been doing this for so long, and we are just very excited about bringing this to you. So give us a call. You can call us at 804-824-9533, or just go to our website at warranty-read.com, and you can fill out a little form there and send it to us. And it really doesn't take a long time to get you started, but don't put it off.
Well, we'll put all that contact information in the show notes for sure. And Tim, I can tell, man, this is service for you, and it's service to others. Really, really good stuff. Really good stuff. So, Tim, this has been genuinely eye-opening conversation. I think a lot of our listeners came into this episode thinking warranties are just a cost of doing business, and they're leaving with a completely different perspective. The idea that you can flip that expense into an asset that builds wealth and increases your business value, man, that's the kind of thinking that separates, builders from operators. Again, if you want to learn more what Tim is doing with warranty-re, we're going to put contact information in the show notes. And then you can also reach out to him. We'll put his email, tim@warranty-re.com. So, Tim, thank you for being on the Why We Build podcast. I truly appreciate you sharing this with our community.
Greg, thank you for having me, and God bless all of y'all.
Everyone, thank you for listening to the Why We Build podcast.
That's it for this episode of the Why We Build podcast. We hope you found something valuable to take back to your team. If you enjoyed the show, be sure to subscribe and leave a review. Please send in your ideas for future episodes. Thanks for listening, and we'll catch you on the next one.